timing is everything when thinking about when to drop your retirement paperwork. Understanding what happens to your leave balances, health insurance, and survivor benefits can inform that decision. Here with more on those key considerations is the founder and principal retirement specialist at Retire Federal, Tammy Flanagan. Tammy, thank you so much for joining me.
Terry, it's really nice to be on here with you for the first time, and I appreciate being invited to come with you.
Well, you've got a lot of really important information that I know our listeners are very keen to hear about things they should be thinking about if they're thinking about federal retirement. We covered a story a couple of weeks ago about OPM moving to automate the retirement application process. Let's go with that. What are you hearing? What are you seeing?
Yeah, it's interesting because I go back quite a number of decades in this business of retirement benefits, and I know this has been attempted before to automate the processing of retirements and the whole process of getting the application from the agency to OPM and then the actual processing of that application. So from what I understand this time around, by July, I believe is the deadline for all applications to go to OPM electronically rather than through the U.S. mail or through FedEx, however the agency chooses to get it there. This will be interesting because I think that's doable, getting it there automated. That doesn't sound like a major jump. The real interesting part will be how much time is this really going to save in the processing? Because once it gets to OPM, there's a lot of work that needs to get done, including matching up that application with old information from that employee, going through the court orders if there's a divorce involved. There's so many different moving parts that I'm not exactly sure how much time this will really save, but any savings I think will be an improvement.
When I submitted mine in December, I did it online, and it seemed to move pretty quickly, but I think mine was a pretty simple case. But that does raise a question for folks who are in the midst of doing that application or thinking about whether they should do it and wondering how long it will take. How long does it take, and how should they be thinking about when they'll get their first payment?
Well, this year is kind of unique because, as we all know, there's been a lot of people taking OPM and the government up on the offer of downsizing through the deferred resignation programs, both 1.0 and 2.0. So it'll be interesting to see at the end of September, I believe, will be the biggest rush, although I was looking at the data recently and the applications are up more than 20% even in the month of April. So we're already starting to see an increased volume coming into OPM. So we'll have to wait and see. But employees typically put their applications in, if possible, 60 days, 90 days ahead of time. So a lot of people who are leaving, even at the end of the year, I think some people have already placed their applications with the HR office trying to get ahead of the curve. So those applications, who knows, they may be returned so that they can be submitted electronically, but at least the employee already has it filled out. They just have to get that information into the system. So I don't think that's going to delay things. In fact, I think it will speed things up, hopefully.
Well, that'll be good news. As they're thinking about their applications, there are some other considerations that we want them to have kind of top of mind. One of them that you mentioned is sick leave and annual leave balances. What happens to those in the retirement process?
Yeah, some employees, because I know this year, again, being such an unusual year, a lot of employees have all of a sudden started thinking about retirement where it really wasn't at the top of their mind up until January 28th of this year. So I've been getting pretty basic retirement planning questions such as what happens to my leave? So annual leave, that's deferred compensation. So you'll get paid for that in a lump sum payment at your salary rate, whatever it was on the day of retirement.
And taxation rate too, right?
Yeah. So that's nice. And if you have a lot of it, that'll be a nice cushion of cash to kind of get you through that processing period. But with sick leave, that's converted to service credit. Doesn't make you eligible to retire any sooner, but it does give you some more dollars in your retirement check. So just as a frame of reference, about 1,000 hours of sick leave would give you another 6 months of service credit, roughly. So that's a little rule of thumb to keep in mind, or 500 hours would give you about 3 months. So that's going to add some dollars on an average of anywhere from $7 a month per month of sick leave credit to as much as maybe $20 to $22 a month if you're higher salaried. So, hey, every penny counts in retirement, right?
That's right. A couple of Starbucks there.
That's right. Yes, not going to give you $1 million, that's for sure.
Another question is about insurance, health insurance, life insurance. How do those continue on after retirement?
Yeah, another great question, because a lot of the benefits of retirement mean you can keep those insurance benefits. However, with health and life insurance, you have to meet 2 requirements to keep them. So with health benefits, the requirement is you have to be eligible to retire when you walk out the door. So someone who's resigning with no immediate retirement eligibility, maybe they're just taking advantage of the deferred resignation without the retirement attached to it, they'll have temporary coverage for up to 18 months, kind of like COBRA in the private sector. But that means they'll be paying the full freight. They'll pay the employer and the employee share of the cost. But for those who are retiring, who are eligible to leave under early retirement or regular retirement, they'll be able to continue that same health plan into retirement, pay the same premium for it, as long as they've been covered under FEHB or Postal Service, PSHB, for the last 5 years of their career. And that gets confusing sometimes because we have a lot of dual federal couples where you might be covered under your spouse's health plan, then you switch it back to your, agency withdrawal. But all of that counts as coverage. So whether it's all through your paycheck or partially through your spouse's paycheck, that can still work. It's only if you're covered under a non-federal plan, like a private sector plan, that can be an issue.
Well, these days, maintaining health
insurance, I should say.
Maintaining health insurance coverage is a big deal. I'm speaking with Tammy Flanagan. She is the founder and principal retirement specialist at Retire Federal. So, Tammy, a couple more questions about benefits carrying over into retirement. What about survivor benefits?
Yeah, that's an important consideration. It's something that can affect the value of your retirement, so it's an important one to think about ahead of time. So if you're married on the day of retirement, your spouse has an entitlement to a survivor benefit. Because I get the question sometimes, is like, why do I have to leave them anything? Well, by law, you have to at least consider it. And your spouse has the right to waive it or to accept a smaller benefit, a partial benefit. But it is going to cause anywhere from a 5 to a 10% reduction off of your unreduced FERS retirement benefit. So it is going to cost some money. It's like paying a premium for life insurance in a way, but it does provide that if you predecease your spouse, they'll get either 1/4 or 1/2 of your FERS benefit if they outlive you. And that's not only important for the money, but it's also an important benefit so that they can continue health benefits. Because without that survivor benefit, they stand to lose health insurance through that retirement that you have coming in. So it's an important consideration for sure.
And really one that the two people have to have a conversation about.
Absolutely. And if you do have a former spouse, because sometimes, that former spouse is first come, first served, because there might be a court order saying you have to provide the survivor benefit to that person. And now here you are remarried to somebody else. What do we do about my current spouse? Well, I would recommend you elect that benefit as if that former spouse didn't exist, so that in the event that the former spouse loses entitlement, maybe they got remarried before they were 55, or maybe they predecease your current spouse, then everything reverts to your election on that application. So it may not mean that they get it right away, but maybe in the future things can change. So just elect that benefit as if they're going to get it.
And maybe that might be a consideration worth talking to a professional about.
Absolutely, yeah, because you really got to understand those options.
Speaking of options, let's switch gears a little bit because there's a lot of uncertainty in the federal job market right now. People are leaving or being asked to leave or choosing to leave and then being offered opportunities to come back. So if someone is considering retirement now or actually retires now, but then later thinks about coming back to the federal government, what are the processes around their retirement? What considerations should they bring to that situation?
Yeah, so sometimes I get the question like, well, okay, I'm going to retire this year because it feels like, I'm kind of being forced out, but I'm going to keep looking. Maybe I'll find another federal job. Can I just stop that retirement and just come back to work and pick up where I left off? Not exactly. If you retire, you are retired. There's no going back to work with starting over. However, you can become a reemployed annuitant is what you'd be called. in most cases, your salary in that new job is going to be reduced by the amount of your retirement. So you're only working for the difference, which is why you don't see a lot of reemployed